In my last video on Delta Airlines, I was basically bullied by my comment section into doing a video on Nordstrom. So I've been putting some time into researching Nordstrom, and today we're going to take a look at this beaten down recovery stock. Welcome back to the channel, everybody. My name is Trey, getting in touch with you from Japan. It is Saturday evening. My wife just made me spicy miso ramen for dinner, and it was insane. And check it out, we have some drone footage from the autumn mountains here for you. Just wanted to let you know also, we just started a new series on a little bit about our story here in Japan, entrepreneurship, finance, investing, how we grew, how I make a living here, and also how we turned $200 into $1 million with one of our first successful small businesses. I'm a serial entrepreneur and I love finance and investing and personal growth and these kinds of things. So please take a minute to check out that new series if you have some time. In today's video, we're gonna be taking a look at Nordstrom. The stock price has been beaten down. We're gonna take a look at that in a moment here, but for those of you outside of North America who aren't super familiar with Nordstrom, I wanna share a little bit about who they are, where they're positioned in the market, what kind of store they are. They are a premium retail store, primarily operating out of malls. They have Nordstrom, which has been around for more than 100 years, and Nordstrom Rack, which is basically the cheaper version of Nordstrom. And Nordstrom has about 100 stores now. They recently shut about 16 down in the last quarter, and Nordstrom Rack, the cheaper version, which I'll just call a Rack for the rest of the video, has about 250 stores. And despite the pandemic conditions, they're still growing. I think one of the big reasons this stock has been so beaten down in recent months since the pandemic started in February, March, is because most of their shops operate out of malls. And by and large, malls aren't doing super well. And a lot of people are just betting that malls are gonna be falling apart, going out of business, going bankrupt, and therefore Nordstrom will cease to exist. So the short interest, basically people shorting stocks of Nordstrom, is now above 30%, which has been keeping the price down. I'll get into why that's really important to look at later on in the video. But one of the really interesting things I found out about Nordstrom is that they primarily operate out of Class A malls, which basically means they take the mall's earnings per square foot and they classify malls based on how much money they make. And so the vast majority of Nordstrom stores operate out of Class A malls, which have the highest ranking of earnings per square foot. They've also been known for offering a very premium brand with excellent customer service, and they have like way higher loyalty rates than a lot of other fashion retailers. I don't personally know anybody who's just like, Nordstrom, I love Nordstrom, I have to shop at Nordstrom all the time, but apparently there are millions, tens of millions of people like that in North America. That being said, it's pretty safe to expect this year, 2020, to be a terrible year for the company. And that is also contributing to a much lower stock price. Take a look at the 10-year chart here to see how their stock price has been doing over the last 10 years. Going all the way back to 2010, it's kind of like $50, you know, and they hit their high in about 2015 when they got up to almost $84 there. And then more recently, $65, $70. But at close on Friday, they were at $14 here. Zooming in once again to the 1-year chart, you can see kind of how crazy things have gotten this year since the pandemic started. They have a 52-week high of $42, and right now they're sitting at about $14, or 1/3 of their 52-week high. So perhaps if it has solid financials and they'll be able to make it through this year and next year, maybe we can make a quick kind of like 2x or 3x on our money. So let's take a bit of a deeper look at the company and their financials. Just so you know, I don't own any Nordstrom stock. I'll share at the end a little bit more about what I'm going to do after learning about all the stuff I learned to prepare for this video. But generally speaking, my investing style is more dollar cost into a stock that I like, that's most likely going to be changing the world in the coming years, like big time. And then I like to dollar cost in and then slowly dollar cost out when I see opportunities or big market trends going on. I dollar costed out kind of February, March, and locked in a bunch of revenues. And then after prices dropped, I started to dollar cost back in since then, which I'm doing in a lot of the stocks that I love. So generally speaking, I'm not normally looking at companies like Nordstrom that are just like a normal retail store that's beaten down. But because you guys requested it, I stopped to take a look at it. And I'm actually pretty intrigued. But again, this is not the kind of stock I would get and just like blindly hold for like 10 years kind of thing. If anything, it's kind of like, it's too undervalued, so let's maybe grab some. And then in a year or 2 or 3, depending on how things go, maybe you could get out with 50 or 80 or 100 or 150% gains, something like that. So let's take a look at a little bit more of the market environment, some of the competition, moat, and these kinds of things. In earlier videos I did on both Nike and Foot Locker, I talked about the importance, especially this year, for retail companies to be making a big shift to online sales. Both of those companies have been doing that really well, and thankfully, for those interested in looking at Nordstrom or owning Nordstrom stock, Nordstrom has had a big online presence since about 1998, and they're actually one of North America's biggest retailers. So they've been capitalizing on store closures by having a great online presence. And it looks like for this year, like 50% of the entire company's revenues are coming through their e-commerce. While the in-store sales for Nordstrom's brands have been down significantly this year at 43% for Rack and 58% for Nordstrom, I think a lot of those sales are probably just looping back around to the website. So it's not necessary that Nordstrom as a company is no longer like in vogue, is no longer dope, so people are just like abandoning it. It's probably like, I don't feel safe going to a store, so I'll just buy it on the website type situation going on. Interestingly, since they've had such a head start over a lot of other retailers because they started their website back in 1998, they were one of the pioneers of offering free shipping and free returns, and this was like before Amazon was a household name type thing. So Nordstrom's internet influence goes back a long time. In 2019, their website garnered $4.9 billion in sales, making it one of North America's biggest online retailers. One of the really interesting shifts that we're seeing in the market as a whole, especially as companies like Amazon grow in popularity, is that we're starting to see more brands like TJ Maxx or Kohl's, who are more discounted types of retailers, growing in popularity and growing in number of shops. At the same time, Rack, which is significantly less expensive than its older brother Nordstrom, has also doubled the number of stores since 2012. So that gives you an idea for how quickly they're growing. It's not necessarily a bad trend that customer behavior is starting to prefer like cheaper, more discounted type stores, as long as Nordstrom is meeting people where they're at using shops like Rack. That being said, Nordstrom stores, even though there are much less of them, still make up about double the revenue of the Rack store. So looking a little bit at the financials, since we're in between earnings calls right now, the next earning call is coming up in 3-4 weeks, I think. If you're interested in seeing a follow-up video, please hit the like button down below or leave a comment, and that'll help me to figure out, what my audience, what you guys are looking for. But the earnings report for the second quarter was pretty grim, as you can imagine. They failed to meet their earnings expectations for that quarter, further throwing fire onto the dumpster that is their stock price. And so more and more people are kind of starting to get negative on retail in general, but also negative on Nordstrom in particular, especially as a premium retailer. The good news, however, is that management has been taking aggressive measures to cut down on expenses while also making the decision to close 16 of their shops. Hearing about store closures sounds threatening, but the cool thing about it is that it's kind of like weeding out, like taking out the junk and then leaving the more profitable shops remaining. So by cutting out a bunch of these shops and lowering expenses around the company, they're expected to reduce overhead by about 20% for this entire year, which works out to more than $200 million for an entire savings over this year of more than $500 million. Typically, Nordstrom stores handily break the 30 to 35% gross margin number, but in the last quarter, gross profit margin only worked out to be about 21%, with an operating loss of $370 million. This worked out to about a $1.62 loss per share. Now, hearing figures like this obviously makes it sound pretty terrifying and pretty bleak for the future of the company. And one of the beacons of light on the horizon for the Nordstrom brand is the Loyalty Club. The Loyalty Club now has more than 13 million members who account for more than 2/3 of the company's sales. This percentage has been growing in recent years and suggests that those loyal to Nordstrom will most likely continue to be loyal despite difficult market conditions. And so that's one of those factors that when you're looking at really big, growing, successful, solid companies over the years is really, really important. That ingredient of customer satisfaction and customer loyalty is like one of those spices you throw into a recipe of like a magical, strong, powerful company that's going to keep growing over the years. And so when you look around on YouTube or Reddit or whatever, a lot of the buzz around Nordstrom stock is kind of like, oh yeah, it's super cheap now, buy it now and then dump it when it doubles type thing. But if they can last through this storm that they're going through right now, it's not actually that crazy to expect them to keep growing over 5 years or 10 years. Granted, they're not going to be doubling every single year. And right now, because it's so beaten down, maybe the next year or two are going to be the most juicy, so to speak. But I wouldn't be surprised if they do keep growing in the next 5-10 years. Speaking of loyalty, the typical rack shopper is under 40 years old, but more than a third of those clients end up becoming loyal customers to Nordstrom's brand, offering this lower price option for people to kind of get their foot in the door of the Nordstrom brand and become loyal to it. Seems to have worked out for them very well in the last 40 plus years since they started Nordstrom Rack. Taking a look at Rack's competitors, most of them eke out an earnings of about $200 to $250 per square foot of store, but Rack, on the other hand, doubles that at about $500 of earnings per square foot. So looking at numbers like that give you an idea of how the products are not necessarily like super cheap, but they're able to sell a lot, and single store profitability most likely works out to be higher than a lot of their competitors, giving them a bit of an edge going from here into the future. Now, before we look at the balance sheet and some of the numbers on there, I want to talk about some of the concerns that we have for Nordstrom as well. Obviously, number one is the pandemic. Nobody really knows when things are going to open up again. Looking at the presidential debate the other day, it sounds like maybe a vaccine is coming soon. A lot of words were thrown around, and nobody really knows, so it's hard to say. But all that being said, one of the things that we are seeing this quarter, interestingly, is like in the Foot Locker video, I talked about that pent-up demand that kind of overflowed and packed out stores, giving them a big boost in sales. Similarly, I did a video on Wynn Resorts the other day, and it sounds like gaming revenues are starting to tip up in the last few months here. So even though we're starting to see pandemic infection rates going up again in the US, I wouldn't be surprised if we start to see shops opening up a little bit more and more people getting ready to go out. And then it'll be interesting, especially to see what happens in the holiday season around Christmas. Concern number two is the potential for bankruptcy. A lot of people are looking at this and shorting it, assuming it's going to go down. And if you short it hard enough, it can only go down. But there's kind of two different sides to this story. Number one, Nordstrom mentioned in their last quarterly earnings report that their cash and liquidity position is up to about $1.3 billion right now, which is always reassuring to see, especially in times like this. But paired with that, we saw a huge jump in long-term debt and revolving credit. One of the cool things about having a big company like this, though, is that you can go to banks and say, hey, we have a huge company with lots of assets and lots of employees. Can you lend us some money to get us through this storm? And in a lot of cases, it's easier for a company like this to get money to keep moving forward. And that's probably what that $500 million revolving credit is. And I'll get into that in a minute when we look at the balance sheet. All that to say, it seems like in general, the management is really intent on cutting costs. They're cutting out a bunch of the lower performing shops. And I think just maybe, and we'll see, this will become more clear in the coming weeks at the next earnings report, I don't think they're in super urgent danger of a bankruptcy. A bunch of the competitors are going bankrupt. But again, Nordstrom shops are in like the best malls where things aren't really going haywire. And so I personally am not really fearing a bankruptcy. Potential threat number three, trade concerns. Who really knows how things are gonna go with China? Probably largely depends on who our next president is coming up in a few weeks here. But even recently, Trump hasn't been, stepping up to the plate against China with trade wars or anything like that. That being said, I don't really know in detail like how much of Nordstrom's manufacturing takes place in China in particular, but that's just something to know as a potential threat if you're thinking about buying stocks. And then the biggest threat, number four, is the short interest. That's the number of people who are shorting the stock. And so if you don't know, shorting a stock basically means borrowing a stock from somebody who has it right now and then paying them back for it later. So if you think a stock's price is gonna go down, like right now it's at 14 bucks, I could go and short a bunch of them. Let's say I got a share for 14 bucks and then it goes down to 10 bucks. I can buy at 10 bucks, give that person back their share, and then I made the $4 difference. And so there are huge amounts of people shorting this stock. The short interest right now is more than 30%. My understanding is that it was a little bit higher in previous months and weeks, but a lot of times, and we saw this earlier with Tesla, is that there's so many people shorting it that the price goes way down. So going back to that example earlier about 14 bucks and 10 bucks, let's say I shorted at 14 bucks, instead of going down, it goes up. Let's say it goes up to 25 bucks. Now the bank's gonna come to me and be like, hey, what are you gonna do about that 11 bucks? This stock might never come down again. So we're gonna force you to buy it at this new higher price and pay back those stocks. And so that's called a short squeeze. When the banks come into the people who are shorting and they say, we're gonna squeeze you out, you gotta pay us. We can't let you extend and grow this debt any longer. So in Tesla's case, it was shorted all the way down to like 180 bucks. bunch of people shorting it, bunch of people buying it, and then the buyers eventually won out. And it went up a bit, and then a bunch of short sellers got squeezed out. And that caused it to boing, and then more people got squeezed out, and then boing, and then just kept going up, 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 and exploded. So it'll be really interesting to see. And that short interest is one of the kind of special ingredients that makes Nordstrom really potentially interesting right now. Because if that short squeeze ends up happening, the stock price could like jump big time in like a day, you know? So all that being said, I think it's really important that you're aware of that and that you kind of understand what could be happening with it. I'll get into my feelings about what I'm gonna do with the stock here in a minute. So let's take a closer look at the balance sheet here. First, let's look at the assets. Total assets actually haven't changed a whole lot in recent quarters, but we do see growing cash and cash equivalents from the last quarter. Jumping down to the third row there, we see merchandise inventories. This number went down significantly from the last 2 quarters, but that's not necessarily a really bad thing. Managing inventory for retail companies is really tricky because if you end up having too much and then like the next season's stuff starts pouring in, then you basically just have to slash and heavily discount those existing inventories and then get rid of them at a lower margin. And so seeing this big drop in inventories isn't necessarily a red flag for us here. In fact, it might be a really good thing for potentially higher profits moving forward. Let's jump down here to the liabilities. We see, as I mentioned earlier, the 500 million revolving line of credit right there at the top. Total current liabilities on the whole, kind of the 7th or 8th line down there, have gone up a little bit from the last quarter, but still down from the quarter before that. But in my opinion, the largest concern we have here is the long-term net debt, which has also jumped significantly since the last quarter. The losses piling up on the bottom line are visible down there at the accumulated deficit line. It's gone up about $850 million from the previous quarter. So comparing the total assets to the total current liabilities, we see one of the reasons so many people are shorting the stock. If you divide 3405 by 3642, you get the current ratio of 0.93 at the end of the last quarter. That's actually better than it was for the same quarter in 2019 though, when the current ratio was 0.78. But I'll be really interested to see how this ratio improves when the next earnings report is released. The tricky thing is that because we don't know if it's going to improve or not, we're kind of taking a gamble on that. You know, and if net debt gets bigger and bigger and bigger and sales don't really improve, that's when things start to go really south for a company. So what am I gonna do with Nordstrom right now on this Saturday night here in Japan? Basically, the stock market's closed, so I can't do anything. But on Monday when it opens, I might buy some. Right now, I think the stock is actually a really good value for what you're getting in terms of brand and loyalty and seeing the way management is aggressively cutting expenses along with the really successful e-commerce presence as well as a decently strong cash position. I think all of these items kind of add up to be a little bit more strong than a lot of people are expecting out of Nordstrom. I think in a lot of people's minds, they're like, malls are closing, physical in-person retail is done, Macy's is done, JCPenney is done, Kohl's is done, and therefore Nordstrom is done. But I think when we look at all these details, it shows a bit of a brighter kind of prospect for the future. But if the risk factors that I mentioned earlier are tolerable for you, then it might be worth it to jump in. I think it really depends on your risk profile. If you're like super balls to the wall risk master, then go for it with a decent sized portion of your portfolio. Personally, I'm not that type of investor. I like to hedge my risk a little bit, so I think I'm going to start with a small position in Nordstrom and maybe step it up, dollar costing in a little bit here and there, just kind of watching it, you know. I'm not gonna like YOLO, but I kind of can't blame you if you're like a really short-term perspective minded investor and you're thinking about doing it that way. And so for me, I think I'm gonna dollar cost in and dollar cost out in a little while when things start to look up again. But at the same time, knowing that if things just went haywire and they did go out of business in like a year because the world is like falling apart, it's not gonna end me, it's not gonna ruin me, and I'll still be able to get up and keep moving forward. These are all things you need to be considering. And one of the reasons the potential upside for Nordstrom is so high right now is because there's so much risk associated with it. So what are you gonna be doing with the stock? Are you gonna be buying more? Have you been buying more? I know a lot of people have been. Really interested in hearing kind of what your perspective is on how long you're gonna keep buying into this company, or if it's just kind of like ride it for a bit and then get out immediately kind of thing. What are you gonna be doing with the stock? Let's hear more down in the comments section. Thank you guys very much for your time. Thanks for watching all the way to the end. It means a lot to me. Love you guys and have a great week.